On today's episode of the Cryptoverse Market Roundup, NEO strikes again, up another 30%. Bitcoin sets a couple of new all-time highs, and I'm going to do the latest reading of the price charts. So stay tuned for that. Hi there guys, welcome to the latest episode of the Cryptoverse Market Roundup. I am your host, Chris Coney, the founder of Cryptoversity, the online school where you can learn about Bitcoin, cryptocurrencies, and blockchains. Find out more at cryptoversity.com. So let's begin by going over to CoinMarketCap. The biggest winner in the top 20 today by percentages is NEO. What a surprise, NEO is up again. It's now climbed to the 5th most capitalized coin with a $2.5 billion market cap, and that puts it just above LiteCoin. I've never seen NEO above LiteCoin before in terms of the rankings. So NEO is now trading here, according to CoinMarketCap, at $50.36. And in the last 24 hours, NEO has gained another 31%, near enough. And we saw some big leaps for NEO last week, and now it's gone up yet again another 31%. NEO is also the most traded altcoin in the last 24 hours with $510 million of trading volume. That happened a couple of times last week as well. Now moving on from there, I've given the biggest loser award to BitShares. It's just hanging in the top 20 there, down 5.19% to 15 cents a coin. And it's right about $403 million of market cap. I've given OmiseGo the Honorable Mention Award today. It is also up another 17%. In their 13th place, $7 trading price and $688.5 million of market cap. Other than that, we've now got 10x in the top 20, which it had a good old run last week. And then we have obviously Bitcoin setting some new all-time highs, but we'll take a look at that in the chart reading segment. I also like to pick one of the more obscure coins further down, and particularly ones that have had an absolute insane gain. So this one, Bytum, is in 38th place. It's up 92.87% in the last 24 hours on $45 million of trading volume. And I've taken a look at this. I've never heard of it before, but their sort of headline is they're going to put assets from the atomic world into the bit world. So from the atomic world to the byte world, they call it. So to me, that means like physical material assets being put on the blockchain. Now, while that's their original promise, if you watch their explainer video and read on through their site, they plan to do a lot more than that. And they go on to talk about all the benefits of what blockchains can do. And that's where they kind of lost me a little bit, because if you've followed me for a while now, I'm a big fan of specialized blockchains that address a specific problem and then cater to that problem. So they build the blockchain to serve that problem better than anyone else. If you try and become a general purpose blockchain, then you're going to be beaten out by the specialists in all the areas that you are trying to compete in. That's just a rule of business that I've found over my, 13 to 14 year career in business. So I liked the fact that they started out by saying we're going to put atomic assets on the blockchain, and I thought, cool, if that's what they do, they should do that to the best of their ability. But then it starts expanding out into all other things. So have a look at their explainer video and you'll see what I mean by that. That's all in terms of the market movements for today. Let's move on to the chart reading segment, courtesy of Coinigy. If you'd like to sign up for a Coinigy account, please click the link in the video description. You can get yourself a set of charts like this. You can copy my analysis if you like and follow along in the market roundup. So this reasonably bear chart is the Bitfinex price for Bitcoin Cash against the US dollar. We're trading in that range between 335 at the top and 280 at the bottom. Not much to write home about right now on Bitcoin Cash, so I'll collect more data on that as we go. I won't collect the data, the charts will do that for me, of course. Right now, Bitcoin Cash is trading at $304.50 on Bitfinex, so that's pretty stable now after the opening or the creation of Bitcoin Cash. More interestingly is Bitcoin itself. I've already redrawn my Fibonacci retracement lines, as you may be able to see here. The previous high that we had there was 36.32, so $3,632. That was where I previously drew my Fibonacci retracement lines to, and then over the weekend, 2 big buyer days set 2 new all-time highs. So I've redrawn that with the top of the Fibonacci levels at 4,190. And actually right now we're $100 below that at $4,090.80. So that puts the floor, if it were going to pull back, to that previous high of 3,632. So either it will break again and set another all-time high, or it will pull back to that 36.32 level. And that is where I will be buying. Now, interestingly on this, those people that got their Bitcoin Cash straight away when the chain forked and then sold their Bitcoin Cash for Bitcoin, based on this, that seems to have been the right decision, because the Bitcoin is now rocketed in value. I personally didn't do that. I've just kept my Bitcoin and my Bitcoin Cash as an insurance policy just in case, right? This is me. I haven't took a side. I'm going to go with the market. So I've kept my Bitcoin Cash just in case, even if it's a small possibility, that Bitcoin Cash ends up taking over Bitcoin, right? I wasn't prepared to risk just gaining a few $100 extra by selling my Bitcoin Cash and losing my insurance policy. So that's just the first principle of investing. Don't lose money. Always protect to the downside. Moving on to Dash then. I pretty much called this one last week. It looks to have been spot on. When we were moving up gently here, I said that we were going to run to about $210. That is almost exactly what happened. It actually hit 211.18, and then that was about as high as it got 2 days ago, so that would have been Saturday. Then it's gone down and it's pulled back to 200. So that's for me, that's the most significant resistance level at 200 there for Dash. And at the bottom end, we've got about 185 would be the bottom. So if I were going to get back into Dash, I would get in around about 185 and then run it back up to 210. Moving on to Ethereum then. Ethereum's also obeying its levels here. The top I called for the channel that Ethereum would be trading in was $306.75. That also happened Friday, Saturday of last week. Struggled to get above it. Even though it did hit a high of 319, it's pulled back under that $306 level now. And at the bottom, we're looking at 275. I guess that would be the next entry point if it does pull back. But one of those levels is going to break before we run on any further. Now, IOTA, big run up. I called it at 63 cents as the sort of target, which was right back to this high point of the 24th of the 6th. Completely destroyed that. So that was on Friday, completely blew through that. It was quite far down from that. It would only just broken that 78.6% Fibonacci level, which is sitting at about $53 cents. It's 52.5 cents. And it was sitting above that. I was saying that was support, and then it just took off like a rocket, broke right through 63 cents, and has continued to run on. So I'm definitely going to have to redraw my Fibonacci retracement lines now. In fact, I may as well do it while I'm here. So I'm going to delete that one completely. I'm going to go to the Fibonacci retracement line, and I'm going to go, that previous one was from a high to a low. This time I'm going to go the other way. I'm going to go from a low to a high. So I'll take the low of that day, which is the 15th of the 7th, and I'll stick it right on the high of today. And you know, I like a bit of precision, so I'm going to edit the settings of it. And this is an interesting thing that I like to do. It simplifies it for precision. I'll highlight price 1, and then you can just wave your mouse over the day that you want to get the price from. And then right here, when it displays the open high, the low, and the close, you can just type in what you see. So rather than having to remember it, I just type in 0.146. So save that. Oh no, I need to do the other one. So I select price 2 and do the same thing. Wave over the end of the Fibonacci levels. Look at the high price, which is 0.857. Save that. All right. Always remember, lock your indicators and save, because otherwise Coinigy will wipe them out. Right. Now that gives us a new picture. If we were going to get a pullback, it would be a pullback to 69 cents. So that's now based on a bit more data, and especially this run. I think these Fibonacci levels are going to be pretty reliable based on the singular direction. There's only a tiny pause there, one sell a day on the 9th of August. Other than that, it's gone absolutely mental. So if it were to pull back, we're looking at 69 cents for a bounce. And if it breaks that 85-cent mark, then it may run on even further. Looking at LiteCoin then against the dollar. We spoke about this on Friday and pretty much spot on. LiteCoin is pulling back to the Fibonacci level there, $43. And I was saying as it pulls back, it's going to hit its medium-term trend line, which it reasonably obeys and has been reasonably obeying for how long now? Since sort of April. So this is this medium-term white trend line, which I've drawn reasonably thick because, you know, like I say, thicker the line, more confidence I have in it. And so it's going to pull back to that. So where's the bounce going to be? If it continues in this way, it looks to be about $45.83, where it's going to pull back to and then bounce off its trend line and move back up. But it has to break that $47 mark and stay above it. That's what we were looking at before, but on the 8th of August, it went above it and then sank back down again the very next day. So there wasn't a lot of confidence in the price above $47. And even if it gets above $47, it's then got another barrier to break through at $50. Again, the last time it was above that was the 4th of July and didn't stay there very long, you know. So this is, there don't look to be that many big runs to be had on LiteCoin in terms of technical levels if you're going to do stop losses and profit targets and so on. But the next time to get in that would be safe, in my opinion, again, this is purely for educational purposes, would be, what did I call it? Let me wave over it again. Around $44 when it hits the trend line, which it depends when it hits the trend line, but I would do that. And then I would have a stop loss around the $43 mark, just below that Fibonacci level for a bit of protection. And in addition, we've got the 50-day moving average coming to save the day. So if that 50-day moving average comes above the red Fibonacci line, that'll also help with a bit of support to protect the stop loss if you put it behind both of those levels. And then Monero. Monero is also struggling to get and stay above that $50 level, which is also its Fibonacci level, which is what percent, which way around have I drawn this one? I always have to turn the auto scroll off that one. Yeah, so it's the Monero's 23.6% Fibonacci level. It's $49.98. Call it $50 because that's fair. And Monero, like last week, did manage to get up to $53 and then has sunk back down below it once again. And you'll see that the 50-day moving average on Monero is pretty sideways. So it's not really helping, it's not trending, number one. And number two, you'll see it just doesn't obey it in terms of support or resistance because the price slices through it left, right, and center. So Monero, for whatever reason, its character doesn't seem to bother with the 50-day moving average. And what we'll be looking at then, in terms of this pullback, the next floor, to my mind, would be like $43. It's actually $42.66, maybe a little bit above that. $42.75, let's call it. So that would be the pullback. We could get in there, I suppose. And now we know that that level isn't very good support at $50. Sorry, isn't very good resistance. We may be able to even go back above that. The other line I drew was the next major target at $56.43, which there was a bit of interaction with back in May time. And that to me is where I would like to see Monero go. We've got a bit of price cyclicity on Monero back from the 17th of July. So we've got like a phase 1 here, phase 2, and a phase 1 and a phase 2. I did try and draw a more steep trend line there the other day, but it just didn't fit whatsoever. So it's only by my eye that I see two phases of cyclicity in an upward direction there. And then the 200-day moving average is slowly inclining. So Monero is moving up, looking at like the past month, say, but it's very chaotic, to say the least. So there we go. That's all I've got for you in terms of the market roundup and the chart reading for today. Thank you very much for joining me. If you like this episode, hit that like button. And if you're new around here, get subscribed. And if you would like access to my very best material, such as my structured online courses, which will teach you how to make and save money with Bitcoin, check out cryptoversity.com. Alright guys, that's all for today for the Market Roundup. I'll be back later with the news and commentary show. So until then, it's me, Chris Coney, saying bye for now.